Welcome back to the Inner Circle Show. In today's episode, we have two incredibly different Tesla price targets and opinions on Tesla that we need to discuss. And we also need to talk about why Palantir stock has been increasing so much recently. But before we get into all of that, don't forget to like this video, subscribe to the channel, and turn your notifications on so you never miss an upload Monday through Friday. We know that Tesla is probably one of the most controversial, bipolar and divided stocks and companies to invest in out there. Some people really like Tesla, they have all of their portfolio in Tesla and they see the long-term vision. Other people completely disagree. They view Tesla as just a car company, it has financial issues, it's going to go bankrupt, all these different things. It's very split. Most of the people watching this video will actually be on the side of pro-Tesla. They will think that Tesla is a fantastic company and a good investment option. Some of you may disagree. So we have had two very different takes come out on Tesla. Two interviews, one given a price target of $15 per share. Make of that what you will. And another giving a very bullish, optimistic view on Tesla that's given a price target, a base case of $2,600 per share. So I want to react to both of these and actually see which one makes most sense. We will start off with the more negative opinion first. So just to give you some context before we actually hear what this guy has to say, the person being interviewed is someone that shorts Tesla. He has been shorting Tesla for a number of years, and just remember that short sellers profit when a stock price declines. So that's when they benefit most, when the stock actually goes down. So their objective, their narrative, is one that wants the stock price to go down because that's when they see their gains. So just bear that in mind, but we'll take a look now and we'll see if he makes any sense or he has a point at all.
After shareholders reapproved of Elon Musk's multi-billion-dollar pay package, now the stock is down nearly 30% compared to last year. You're taking a one-year look here, and we're taking a look at the shares over that 52-week period. Our next guest has been shorting the stock.
So just before we move on to what the guest has to say, this interview came out around 4 days ago at the time of filming this video. And yes, the Tesla stock is still down over the last 1 year period, but it has been doing quite well in the last sort of few days. Yes, it did fall after the shareholder meeting, which I guess was kind of a surprise, but you know, these things happen. We can never predict what the stock price is going to do in the short term, of course. But yeah, over the last couple of days especially, the stock's actually been doing quite well. We've had quite a lot of interesting information come out, FSD in China being one of them, and also Elon's master plan number 4. We're going to talk about both of those things in probably tomorrow's episode, so make sure you're subscribed so you don't miss that. But yeah, let's carry on with this.
Since 2020 and sees more risk to the downside for the EV maker. Per Lakander, who is the Clean Energy Transition CEO and Portfolio Manager, here with more. Per, great to have you on the program with us. First and foremost here, how much slippage do you think we could see?
Yeah, thanks for having me. Well, in my view, Tesla is the biggest stock market bubble in world history. And we have just seen the start of it. You see that the models are aged, and valuation is absolutely insane. Earnings are falling off a cliff. I would say they're falling 50% this year. I have like 140 earnings for this year. I think consensus is 265. It was like 5 at the beginning of the year. So if you think of it, $1.50, how do you value that? I think given that there is no growth here, 10 times earnings is very generous. So my price target is $15. Having said that, I think this in the
Wait. His price target for Tesla is $15 a share. $15. Okay. This is a company who, even if you remove everything else that they're doing, if you remove FSD, if you remove Robotaxi, if you remove even the Cybertruck, if you remove the energy portion of their business, if you remove all of that and you just look at the EV business, so just them selling EVs, nothing else, that still doesn't warrant $15 a share. This man, in my opinion, has lost it. He said Tesla is one of the biggest stock market bubbles or something like that. Disagree a lot with that. I think Tesla are one of the companies that are making the most innovative decisions for the future. I think Tesla are going to be one of the biggest companies in the entire world. I think they are working on real world AI, maybe more than any other company out there. Yes, it's early days. Yes, there is a lot of things they still need to execute, but I couldn't disagree with what he's saying more. I don't know where he's going with this, but we'll carry on listening.
To be a donut because once it gets into those levels, there's so much going on here in terms of class action lawsuits, boards, which is paying itself enormous money, Elon, which is paying itself enormous money. So.
Okay, so he's basically saying that Tesla have a lot of issues, financial issues, board issues. They're paying, I think he just said, if I heard that correctly, they're paying Elon too much money. Just on the Elon pay package, like this, we obviously have the outcome now. The shareholders once again decided that we wanted to give him that compensation package like we did in 2018, even though we had the whole lawsuit. And this will go ahead to the judge now and hopefully will be reapproved as it should be, as it always should have been. But it's not about the money. It's not about the money. It's about the voting power that comes with it, because Elon needs to be aligned with taking artificial intelligence at Tesla forward. And artificial intelligence, if in the wrong hands, could be very, very dangerous. He just wants the voting power, and this isn't voting power that means no one else has a say. This is just voting power so that he has a say. That's it. That's all it comes down to. So I don't think it's the case that Elon's getting paid too much or anything like that. He doesn't even use the money to buy materialistic items. He uses the money more often than not to put back into his businesses to better the future world for all of us.
I think this is hugely dangerous, and in the end, it's going to prove to be the next Enron.
Okay, hang on a second. We need to just have a little think about that. He said he thinks that a Tesla investment is insanely dangerous. I mean, it's more risky than maybe putting your money into a diversified index fund, of course, but I don't think that's where he's going with that comment at all. And he said he thinks it's going to be the next Enron. I had to do some research on what the Enron scandal was, but basically, Enron was a really large, pretty successful energy company. You know, they saw success, and then in 2001, I think it was, they had a massive, massive collapse. They absolutely collapsed to the ground after being a pretty good company, seemingly a pretty good company. And they collapsed due to accounting fraud and financial mismanagement. So he is saying that he thinks Tesla is going to see a similar thing whereby they do well and then they just collapse completely because of accounting fraud and financial mismanagement. Where is the proof? Where is the proof in that? Because when you look at Tesla's finances, and especially what they've managed to achieve and where they've come from, which was a very, very different place in terms of nearly being bankrupt not that long ago, they're very, very strong financially now. They are not near bankruptcy at all. And accounting fraud, that's quite a big statement to be making.
Lots of questions. I guess
she's confused just like we are.
First, just starting off with some of the concerns that you listed. Those concerns have certainly not caught up to the stock price. And even taking a look at the reaction that we saw from some of Musk's comments last night, there initially was some excitement surrounding the growth, at least that he sees for Tesla over the next several years. I guess my first question to you is, what's going to change the perception here or the minds of investors? Because up until this point, we haven't seen some of those concerns that you've laid out reflected really at all in the stock price.
I would say yes and no. Let's not forget that the stock is down 60% from all-time high.
This is what these bears always say. Oh, but the stock's done nothing for 3 years. The stock's down year to date by whatever percentage, and Nvidia and everything else is up, so it must be awful. No, this is just short-term volatility. We are entering a new era of Tesla. I think things are going to look very, very different. And if you don't agree, just don't put your money in it. But I think this is a very, very, very unjustified bearish view, in my opinion.
Same time as the market has gone up 20-25% in the meantime. So, but it's step by step. Where what will need to happen here is, of course, that the retail crowd needs to give up, because that is what's holding up this stock. You know, valuation makes an absolute.
He said he needs the retail community behind Tesla to give up. I don't personally see that happening anytime soon. He would do very well if that happened, of course, if he's short in this company. But yeah, let me know what you think about that in the comments. The only thing that would stop me from investing into Tesla is if there was a fundamental change in the company. If I didn't see it going where I think it's going to go. That hasn't changed for me. That's only got more and more, I've only got more and more convicted and more bullish as we've had more information come out, more data, more evidence that it is actually taking place and it is happening. So I'm a Tesla shareholder, a retail Tesla shareholder that won't be given up. I don't think he's going to get his way with that one.
No sense.
Trades
on...
Per, do you think the retail trader, though, will give up on this? And I think that that's so interesting, especially surrounding Tesla and that excitement and exactly what that group of investors has been able to do around the broader story here for Tesla.
But everyone runs for the hills when it goes down. So the stock needs to go down. Once it goes down, it's going to go down more. And I think what drives it down is earnings. And I think we are very, very close to the turning point, because so far it's been a slippery slope. They've sold cars poorly, therefore they lowered the price.
They've sold cars poorly, therefore they lowered the price. Also, having a slightly underperforming earnings one quarter doesn't mean that the company is going to experience accounting fraud and bankruptcy and it's going to go to $15. Yes, normally when there's a poor earnings or a slightly underestimated guidance or something like that, the stock price does drop in the short term. And Tesla is one of those volatile stocks. It does see swings up and down very, very quickly.
Therefore, earnings went down and it circulated. Now they are very, very close to ways end here. This quarter, they have really introduced almost 0% interest rates on the cars. When Q2 results come, if you think Q1 had terrible deliveries, but actually not that bad earnings. In Q2, they have done everything to get cars out of the door, and it's gone relatively well. So deliveries are not going to be great, but they're going to be okay. But earnings, 25th of July, are going to be absolutely terrible. There is a chance that the company will be loss-making. If it's loss-making one quarter and then it's loss-making in Q3, I can guarantee you this is double digits. And then I think many fanboys will run for the hills. And
he thinks that Tesla are going to show a loss on 2 quarters earnings in a row, and then the stock price is going to go down to double digits, bearing in mind that, what is it right now? Let's have a look. $187.44. So we go from 187 to double digits, so to 99 or below, and then it's going to go even more low than that, even lower, and the Tesla fanboys are going to run for the hills. What a prediction.
We are at my 14.
Earlier in the hour, we spoke to Dan Ives, Wedbush Securities analyst and managing director, actually. Here's what he had to say about the EV maker's future, and I want to get your reaction on the other side.
But also, this is one that you're going to see 3-4 million vehicles per year when you look out 4 or 5 years from now. And again, betting against Musk, it's been the wrong move. And I think this has clearly been a turbulent period. But I could see that Cinderella story starting again as we go into 2025.
Now, you are clearly saying that there is a reason to bet against Musk, but it seems like there are a lot of, at least shareholders right now, regardless of whether or not retail is the single proponent that's holding up the stock, that you believe there's reason that you should bet against Musk. As long as
Absolutely.
Musk is in the helm, does it seem like this is a company that is eventually going to get towards what you've set forth in your own target?
So what I think he's missing is what's going on in the overall EV space. I have to go a step back a bit. We came out of COVID. The auto industry was constrained. There were early buyers of EVs. You made a killing. And Tesla was almost a monopolist, and they made a killing on this. Then when things are very good, of course, everyone piles in. So all the conventional auto producers are piling in, and these models have started to come in 24. More of them are coming in 25. Tesla has nothing. So I'll tell you, there is a true cycle which is playing out in EVs. No one, being battery producer, auto producer, lithium miner, no one is going to make money over the next couple of years. And then Tesla has gone from being the leader to be the laggard. So, you can't have a stock being at 500 billion market cap if you make no earnings. And that's not been the case in the past. So I'm extremely convinced. And, just listen to what GM, Stellantis, Mercedes, whatever are saying on EVs. They don't make any money, and it's going to get way, way worse before it gets better.
He does have a point that the likes of GM and these other legacy companies don't make money on their EVs. Tesla does. Tesla does make money on their EVs. One of the only companies that does. That is one of the reasons that they stand out. The EV space is growing. Yes, in the short term, things are painful sometimes, absolutely. But in the long term, that is the way that that is going. EV adoption rate is going up. ICE vehicles are going to slowly diminish. It's not going to happen overnight. Yeah, do let me know what you think about his predictions in the comments below. So now let's move on to Tasha. Tasha works for ARK Invest, who have, of course, recently published their new price targets and their new models. Their base case, their expected value for Tesla stock by 2029 is $2,600 per share. Very, very different to $15. So let's see what she has to say.
Percent of the value of Tesla could be attributed to robotaxis in 2029.
So sorry, straight away there, I didn't mean to pause it so quickly, but straight away there, her vision is very, very different. The other guy was thinking of just the EV sales and how Tesla is nothing but an EV company and a bad EV company at that, which makes no sense. Tasha is seeing that Tesla is very much moving out of that. And actually, the robo-taxi business area will take up 90% by 2029.
This will totally transform the business model from essentially one-off vehicle sales with a little bit of software to a recurring revenue stream. And we think it'll have very attractive margins. Autonomous cars will not only change how you and I get around, they'll be so much safer, but they'll also be quite profitable to Tesla and very meaningful for shareholders.
So Tasha, by 2029, $2,600 a share, that's 4 years from now. From where we are now, I mean, a lot's going to have to happen, right? And I got to wonder, just in terms of scaling and also manufacturing, they have this new system that they, I think, tried to implement, right, which is more unibody, fewer parts, so faster, cheaper, et cetera. They've abandoned that, apparently. Is that going to affect rollout of robotaxis?
I think that the rollout of robotaxis is actually not dependent on the manufacturing of the next generation vehicle. I do think that the next generation vehicle will be used for the robotaxi platform, but they can turn their current fleet, Tesla's been saying this for a while, that they can turn their current fleet into robotaxis as well. They could take cars coming off of lease. They removed the option to purchase, for instance, the Model 3 off of lease for that reason. I think so that they can seed their robotaxi network. I think that this could be started in the next 1 to 2 years is our assumption. We already see robotaxis today from companies like Waymo, which is Google's effort. But it's happening at a very small scale. So I think that Tesla could be the first player.
Yes, we do see robo-taxis from Waymo, but very, very different to Tesla. Tesla are going about solving autonomous driving, incredibly different in terms of the actual way that they're going about it, the technology that they're using, the way that they're training their fleet. Tesla also have the data advantage, and we saw recently that ARK Invest actually, so Tasha, the company Tasha works for, they published in their model showing data that says that Tesla is accumulating data at about 110 times the rate that Waymo are. So they're in very, very different places.
But it's happening at a very small scale. So I think that Tesla could be the first player to really bring this technology to scale.
Yes, and that's the difference. Tesla's ability to scale. Other companies can produce prototypes in small fleets and get them up and running and, do relatively well. But at mass, at scale, Tesla's the one with the advantage here.
Although I have to say that autonomous right now, it looks like the Chinese are a little bit further ahead in terms of, especially in terms of testing the technology. So, something that Kathy said in that soundbite a couple of seconds ago caught my ear, and that is SaaS, software as a service. It strikes me that going down this whole robotaxi route, which is what Musk seems to want to do, right? does a couple of things, right? It means, you're not thinking of a car, an EV, as a commodity. You're thinking of it as a service. And you're also thinking about volume, that is wholesale sales, not to individual customers, right? Fleet sales, because that's what robotaxis are likely going to mean. Yeah?
Yes, it does change the business model, and it also it streamlines the sales funnel for Tesla. If they're going to sell a lot of vehicles in terms of robotaxi vehicles to fleet owners, they then sell many cars to one individual rather than many cars to many individuals. Completely changes the game. And then the fleet owners or individual customers of Tesla vehicles that own Tesla vehicles now make money out of having a Tesla. That's no longer a waste of money. Most people waste money on their cars because they're sat on driveways, they're sat at work, they're not being used all the time. They're actually a really poor investment decision. They're a poor way to spend your money. If the car is making you money, that becomes a very lucrative, very interesting purchase.
Yes. And first, I'd actually push back that there's more testing happening in China. I think there's a lot of news out of China, and it's very aggressive. It wants to be, electric vehicle autonomy forward. And I think that's the right decision. And that's what the government wants for sure. But actually, the U.S. has been pretty surprisingly lenient when it comes to testing this technology because it's decided at the state level. So Tesla, for instance, they already have over 1 billion miles cumulatively driven in their full self-driving software. And then on the software as a service model, absolutely. So we picture this being a fleet sales model that could be the end consumer companies could pop up, and this could actually be a profitable business model, particularly for companies today that actually might have to change what they're doing if they're tied to the traditional gas-powered car ecosystem. That could be an option, or it could be a startup that owns and maintains these fleets. But ultimately, we picture Tesla taking a cut off of per mile revenue, much like Uber does today.
Yes, so Elon said that there will be basically 2 models. One will be like Uber, one will be like Airbnb. The Uber version of the robotaxi Tesla model will be whereby Tesla has a fleet of vehicles, they own them, and then they go out and do their thing, and Tesla takes the cut of that. Then you'll have the Airbnb section whereby the fleet owners will own them, or a single customer. They will add or subtract them vehicles to the fleet at any given point when they're not using their vehicles. Tesla will take a small percentage of that money. I'm thinking 20%, maybe even less, maybe even 10, maybe 30, who knows. And the rest of the money, the majority of the money, will go to the owner of the vehicle. That's free money. That's just cash flow coming in for Tesla. At that point, they're not having to do anything for that money. That is where things start getting quite wild on the valuation side of it.
But I actually think that they could take a higher cut than Uber does today because, one, the underlying cost structure is better. And then, I think that if Tesla wholly owns and operates the network and, is able to charge Uber and Lyft equivalent prices, again, especially in the early years, we think in the first 50% of all miles that will go to robotaxis, that is where all of the economics will be. So that's why it's so important to be early to scale here.
Tasha.
Yes, it's crucial to be early to scale. I agree, and I think Tesla will do that. I also think that I think ARC actually said this themselves, Tesla will have a take rate higher than Uber. They will be able to give customers a different experience. It will be safer, no drivers. It will be more luxurious, hopefully. It'll be a nicer experience. People can just go on their phones in the vehicle, not have to deal with talking to anyone, more luxurious environment. And also, it will be cheaper. It's got to be cheaper, especially when they start scaling this fleet up as well. So I think they will undercut Uber. I think that we'll have to see how that plays out. But do let me know what you think about both of these interviews. Which one do you agree with more? Which price target do you agree with more? Let me know in the comments below. On Monday, Palantir stock went up over 6% in one day. And over the last 5 days, at time of filming this video, the stock has been up by nearly 9%. So we need to discuss exactly why this is happening. But before we get into all of that, I just want to show you an interview that I came across from an analyst talking about Palantir. And do let me know if you agree with what he has to say in the comments below.
So Palantir is also trading at 23.8. It's up another 28 cents here today. It's in the right space, right? The application software AI space. There's been a lot of chatter around Palantir this year, right? It's been stuck, if you look at it, for the last 5 months, really in.
Yes, Palantir is in the right space. It has an AI product, a big flagship one now, artificial intelligence product that hasn't been around all that long. Yes, they are in the right space. This AI tech space is getting a lot of attention. It is getting a lot of chatter, like he says. But I think a lot of analysts are quick to say that that's why Palantir are doing well. They're just in the right place at the right time. Yes, I think that they are in the right space at the right time. But I think what we also forget is that Palantir are offering both government customers and also the commercial side real hard AI that is valuable, that is changing the game. They're not just offering, nice to have technology, nice to have solutions. No, they are offering valuable solutions to real problems. And that's where they differ. So yes, I think they're in the right place at the right time, but I don't think that's the only reason that more and more people are getting interested in this company and more businesses are demanding what they have to offer. And we have seen that other companies that also use the buzzword AI and also have a few different artificial intelligence related products have done well as well. But a lot of them have done well just maybe due to the hype of what's happening at the moment, the AI revolution. And this won't continue. Only the companies that actually have good solutions will continue to do well for the long term. Because businesses might want these other solutions and maybe government organizations as well. But as soon as they figure out that these solutions aren't actually all that useful and aren't worth the big price tag that they come with, they will move that money into other companies whereby the solution is actually useful, like a Palantir, for example.
In this kind of $19, $25 range as you go across, it's been kind of hovering all around the trend lines, just on the south side, just on the north side. We're back to the north side of all three trend lines now. And as they develop in this AI space, as they develop its structured products, it's relational, it's geospatial, it's all this stuff that we're talking about. I think that's going to continue to fuel this, right? The market, now if the market backs off, which, it very well may, it's also in the growth space that is probably going to get hit, right? Tech will probably get hit because it has outperformed. But I think you're going to see the downside risk here is in the, look at the chart, Ben will show you, probably in the...
Okay, so he's mentioned that Palantir has outperformed the market, which it absolutely has, and there may be a pullback soon. I do agree, there may be a pullback across the market. Things don't just go up forever, and it's only normal in the stock market to see things have a natural pullback. It's healthy, it's what we expect to see. So if that does happen and it happens across the board and it's not due to something like Palantir not doing well fundamentally and it's just due to macroeconomics or a natural pullback, let's not freak out. Let's carry on researching and staying convicted and buy in if we have the opportunity to do so. That's what I'll be doing anyway. So now let's actually discuss why Palantir stock has been doing very, very well in the last few days specifically. So I think there are 3 or 4 reasons to explain this. I think the first one is that we've had 2 different price targets come out. Both of these price targets are higher price targets than what the stock currently is at. And I think they both have a buy rating as well. So let's just take a look at them quickly now. So here is the first one. So experts set Palantir stock 12-month price target. The first of the most recent revisions, and a bearish one at that, came from expert William Blair, who on June the 7th decided to reiterate their previously assigned underperform sell rating. We're going to ignore what William Blair has to say on Palantir. He's been wrong a number of times and he's very, very bearish on the company. On the very same day, Bank of America proved significantly more bullish as they reiterated their buy rating for Palantir shares. Earlier this year, they set their Palantir price target at $28. By mid-June, another veteran analyst, Stephen Guilfoyle, came out as being extremely bullish on Palantir. According to the expert, the company is the leader when it comes to software and remains well positioned thanks to their entanglement with the US Army and Air Force. He interpreted Palantir as a strong buy, rating both thanks to its technological edge and business positioning, particularly as it was accompanied by a price target increase from $29 a share to $31 a share. So right now, Palantir is trading at just above $25 a share. So that is a pretty bullish big price increase there. and he said that Palantir is currently a top 10 holding for him. So we've had that price increase, but we've also had another one as well. So let's just take a look at this. Palantir shares are trading higher Monday after Argus research analyst Joseph Bonner initiated coverage on the stock with a buy rating and a price target of $29 a share. So firstly, initiated coverage. This means that this is the first time this analyst has paid attention to this company and spoke about it and actually, started covering this stock, which I think we'll see more and more analysts do as time goes on. That's exciting. More people are getting interested. And he's come out with a buy rating and a price target of $29. So he is seeing this to be a very, very interesting company. So he noted that Palantir has expanded into the commercial sector with data management and analytics platforms and expects the commercial segment to continue to be its future growth driver. I do agree. I think the government side will still do well also, though. The analyst also highlighted growth in Palantir's government business segment, including its $178.4 million contract covering the development of prototypes of its Battlefield Titan program. We've spoken about this before. So Argus noted that while the stock is priced at a premium, the firm sees Palantir as a highly differentiated software company with significantly improving profitability in recent quarters. So he then gave a 5-year average earnings growth rate of 19%. I do think that, yes, the stock has had a big run up. So some people think that it may be trading for a premium right now. I still think that it's going to be very, very insignificant what it is now compared to what it's going to be in the future. Alongside these two price targets, we have also had that massive $480 million contract come in. And that wasn't the only contract that we've had recently. We've also had other commercial contracts come in. The Mawson Group is one off the top of my head. And we've had revisions to existing contracts as well that are bringing in even more money. On top of those things, AIPCon 4-day happened. Of course, this is a chance to hear what customers of Palantir think about the software. And, very, very bullish. And this only seems to be a way to sell more of Palantir's solutions to other companies, other enterprises around the world. And that's what businesses want to see. They care about saving money. They care about increasing productivity. And if they are hearing other businesses say, you know what, this has happened to us, this data's changed for us, we've actually saved lives, we've actually saved this amount of money, they're going to start paying attention to that because they are going to want a piece of that as well. And the other thing that I would say that may be driving Palantir's price up a little bit too is just that there is more interest in real world AI at the moment. And that just means that more value, more money is being given to those businesses who can offer solutions to enterprises that are actually changing things. This is what we keep speaking about. Palantir are offering solutions that are not just a nice to have, they are actually becoming enterprise essential. And of course, we've recently seen that the S&P 500 just keeps hitting its highest levels ever. And actually, Evercore ISI, which is a financial research firm, upgraded their S&P 500 outlook to the highest on Wall Street. And they are saying that the AI revolution is only just getting started. So I think people at big companies are now starting to look at which are the best AI companies to actually invest in. What are the best AI solutions out there? And Palantir is an option to them. Let me know what you think about this in the comments below, and let me know if you are still buying Palantir at these current levels. In other news, an article recently came out that spoke about which company might actually be the first to reach a $4 trillion valuation. I will leave this article linked in the description if you want to take some time and read through it yourself and see what you actually think about it. But some of the potential candidates that were highlighted were Microsoft, Apple, and Nvidia. The reasons that these three were highlighted as potentially being able to be the first to reach a $4 trillion stock market valuation is because of this idea that if they continue to grow at the rates that they have been, they could naturally reach that valuation pretty soon. And actually, they said Nvidia may even reach it by the end of this year if they continue to grow in the way that they're growing. Nvidia's actually been a crazy story to follow. Every single earnings that come out, I'm even more mind blown. We'll keep track of that. I have it in my portfolio. It's doing very well. Of course, hindsight is beautiful and I wish I had bought more back in the day, but hey ho, still doing well in that position. But we do have to ask, will the rate of Nvidia growth and these other companies that have been doing very, very well at some point naturally slow down, and will there be a pullback across the market? Let me know what you think about that in the comments below. It then goes to talk about how, aside from these companies that are pretty predictable to be a player for a $4 trillion market cap, what other dark horses may be out there that may actually come out on top. So their dark horses for this included Alphabet, which is obviously the parent company of Google, Amazon, Berkshire Hathaway, Broadcom, which not many people actually speak about as being a big tech company in the AI space. More people should be paying attention to this company. Then we've got Eli Lilly, Meta, Tesla, and Visa. Now, some of these companies have been doing very well recently. Others haven't been doing all that well. Obviously, they're all massive, massive companies, some of the biggest companies in the world. Before we just carry on with this, pause this video and drop a comment below. Let me know which of these companies you think will be the first to hit a $4 trillion market cap. Now, the reason they're saying that some of these underdogs might actually hit this market cap target before some of the potentially bigger players like your Nvidia is because of this. Let's have a look here. To appreciate this point, imagine yourself 3 years ago trying to predict which company would first hit the $3 trillion mark. At the time, so June the 30th, 2021, Apple was at the top of the market cap ratings at $2.28 trillion. Microsoft was in second place at $2.04 trillion, while Amazon was third at $1.713 trillion. Nvidia's market cap back then was only, I say only, $498 billion. So at that time, very few people would have guessed that 3 years later, just 3 years, which is very, very short time period in the grand scheme of things, Nvidia's market cap would surpass Apple's, as happened earlier this month. And I think this is actually a really interesting take because yes, back then, it seems obvious now, right? But back then, I don't think many people saw that Nvidia would have done this. The people that did are the people that are really, really rewarded right now. Because of this, and because of the research I'm doing, I personally think actually, I don't know if Tesla will be the first to hit $4 trillion, beating some of these other companies, but I do think they have a very, very good chance, especially with how the valuation comes out when you start putting in the numbers for autonomy, which I think will happen very, very soon. Do let me know what you think about that in the comments below. On the screen now are the topics we will talk about exclusively on the Vault this week. And if you're a Vault member, I'm going to continue this episode and talk more about both Palantir and Tesla today. If you're not a Vault member, thank you so much for watching this episode. I really hope you enjoyed it, and I'll be back tomorrow with another. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.